This is Zach Meir with the Bulletin Board Heroes here at Vox Market for Monday, the 1st of November. Starting off with Brandshield, where we're in the run-up to an event tomorrow night at the Carlton Club. But in the meantime, we've had decent news from the company today. That's caused the shares to gap up through the 50-day moving average at 18 pence and break that January resistance line around 17 pence. The longer the shares stay above 17, the greater the chance of a move at least towards the low 20s, which would take us back to where we were back in May. Best case scenario target at the moment, I suppose, back up to 25, but at the moment it's probably just better to go for the low 20s at the moment, especially while we remain above 17 pence. One of the more sticky situations in the small cap area has been Bidstack. Lots of people trying to knock the stock and lots of people trying to look for a bottom fishing opportunity. So far, the latter camp seem to have done well, or at least better than in the recent past, breaking that line of resistance from July at 1.75 pence has led to a reasonable rally. The plus point here is that last week the shares remained wholly above the 50-day moving average at 1.85 pence, and the longer they do that, the greater the chance of a move towards the top of the broadening triangle from back in July as high as 2.6 pence, perhaps as soon as the end of this month. Bear trap gap reversal we've had for October, so that was very nice, and the support above the 50-day line does suggest that there'll be a decent move, possibly up to 2.8 pence to fill the gap down from July, the top of that gap down at that level. On to EQ Tech, which I suppose is one of the stocks which is getting a bit of a boost from the hot air at COP26. Here we've got a situation where the shares have broken that line of resistance at 1.25 pence, and that was from May. Above that, looking for the 200-day line at 1.6 pence as a target for perhaps the end of this month. And after that, one could say that the shares are back in business on the bull tack. The longer they remain above 1.25, the old March low, the greater the chance of a lasting recovery there at EQ Tech. On to the stock which has defied the bears for the best part of 2 years, and looks like it's defying them today as well, which is always pleasant to see. Here we've got Eurasia pushing above the rising 50-day moving average at 24.5 pence. End of day close above that would be a decent buy signal or a momentum signal in its own right. We've already got the shares above RSI 50, which is helpful, and decent weekly close above the 50-day line. We could be looking at 40 pence, which is the top of the rising May trend channel. Otherwise, obviously, the next resistance is 27 pence. But I think the setup here with the bear trap from below late September support and the break above the rising 50-day line, that's a strong signal worth more than a couple of pence, I would venture to suggest. Requested stock here from a very keen person who follows the stock a lot, I think, is Eve Sleep. Here we've got a situation where the shares look like they're going to try and break a line of resistance from back in, back in February, I suppose, just straightening that line a bit, so that's where the line is. If we can get through that at 3.4 pence, then there should be a move back towards the 200-day moving average of 4.25 to get things going. Reasonable RSI traces there, so slightly bullish on that front might provide a reasonable amount of momentum for the shares. Also, we're breaking out, or we could break out of that falling wedge or triangle formation that's been in place for much of the year, so that would be maybe the sign that there's a lasting turnaround in place on the way. I interviewed Omega Diagnostics this morning in the wake of its contract news, 750 grand, nothing to be sniffed at, and that's caused the shares, or at least the news has caused the shares to gap higher above that line of resistance, which is quite sticky there at 51 pence for quite a while. And the next level up, really, the 200-day moving average at 64 pence, 65 pence. It would be disappointing if the stock didn't get up to that zone over the course of November, given the news and the possible run of news that we'll be seeing from Omega over the near term. On to Brighton Pier, where there was a swing to profit, 4 million from minus 10 million, and that has been, I suppose, already factored in a way, that we had that gap off a bear trap gap from below the 200-day moving average beginning of last month. So somebody guessed correctly in terms of what was going to happen next. End of day close above the resistance line there from back in November, 79 pence. could open up a new leg to the upside as high as 95 pence over the rest of 2021. This stage only really back below the 50-day line. They're down there at 65 pence, really delaying the upside scenario. 1,200 holes from Rockfire, which was a pretty good headline today. And here we've got a situation where the shares gapped higher off support, which is a positive. And it looks as though they could deliver an end-of-day close above, or a weekly close above, the 50-day moving average to unleash a move up towards that resistance line there, top of the broadening triangle from March, as high as 1.2 pence, maybe by the end of the year, if the company finds more holes with something in them, presumably. Trident Royalties, great mover today. Breaking out after an extended sideways action over the course of 2021 to date, so breaking 41.5, above 41.5 on a weekly close basis, and we're looking for probably a decent move to the upside. That could be as great as, let's say, 57 pence at that resistance line there from October 2019. Also looks as though we've got a broadening triangle progression, which is what you see in the strongest of situations. So above the 40 pence area, looking for the upper 50s, and that seems to be pretty well nailed on. Moving along to Tower Resources, which has been followed here over the recent past quite keenly. We broke that line of resistance there in the 200-day moving average at 0.35. Towards the end of last month, and then managed to close above the 50-day moving average, which is also a plus point. Currently, we're looking to stay above 0.43, which was the September intraday high, and above that, looking for the 0.6 to 0.65 area, maybe as soon as the end of this month. Moving along to some of the stocks which have been just recently on the market. The first one is Benz Creek, which I looked at I think last week, to see where it is now on the near-term chart. We were looking for the shares to hit the notional top of that rising trend channel from the beginning, well, I suppose last month there at 27, 28 pence. That's valid while we hold above the last peak there around the 22 pence area. So above 22, looking at 28 on Benz Creek. And a stock which I've been meaning to look at and haven't got round to is Light Science Technologies. Here it's, I suppose, an even greater achievement, really, in terms of the initial push higher for the stock. Here we've got support line there around 23 pence, 22 and 3/4, so above 22 and 3/4, looking for greater highs, and they could probably be up towards the 35, 37 pence area, which is the top of that rising trend channel from back in October. So that's the best case scenario at the moment, up towards 35, 40 pence, perhaps as soon as the end of this month, or if you're cautious, the end of the year, but looking pretty strong on Light Science Technologies at the moment. Be good to see an end of day close today above the initial resistance for the stock through 20 to 25 to 25.5 pence. That's it from me today. More updates tomorrow.